Alright everyone, here we are with another video with Invest for tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So we're going to look at some different data points here that point towards what is going on in the charts, the overall market, and we're going to use the SPY. And then I'm going to go ahead and share with you guys some articles as well that many have discussed before and topics that we need to be aware of. But before we break it all down, I want to share with you guys the home run opportunities that were mentioned yesterday morning over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators, check out the link down below in the description to the Discord and getting connected to our 42 Vision indicators and becoming part of a growing community of investors all looking to learn and grow together. So these are the two stocks I mentioned this morning. Both of them gave jumps of 3 to 5% and 5 to 10% plus, but one of them turned out to be a home run, and that was EVTL. Caught this one in the pre-market, sitting sideways and pulling downwards towards the bell, and then it continued to consolidate until it got that strength on 42 Vision with that bull indicator. Full strength on 42 Vision here, and it gave a highest point of possibility of 70% plus, guys. And not only that, but we also had our SPY bot sent out a bull indicator at 8:40 a.m. and from that moment forward, strength continued in the chart towards the bell, and even after the bell, and call options went up at their highest point of possibility, 200% plus within an hour, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord, getting connected to our 42 Vision indicators as well as our bots, and we strive for opportunities like these every single day. We look forward to having you join us. Let's jump into these charts. So here we are with the SPY, and as you can see it's consolidating here, and it's hit a dip area with the white with red borders on 42 Vision. For those of you coming across the channel for the first time, white with red borders are the dip areas, and there tend to be reversals after them, right? Some of them are weaker, some of them are stronger, and this right here was a full transition from dip area back on February 23rd and lasted all the way towards the end of March here, towards March 29th and 30th, right? And the rip area is the bright green, and then the transitions happen on the way back down. Now we also, apart from the bars from white with red borders to green, from green back to white with red borders, which is our dip and rip areas, we also use the bull and bear indicators, which I'm going to pull up here, and we use them as extra layers of confirmation. You can now gain access to it as well. The link is down below in the description to the 42 Vision indicators, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY. On the one-day chart, it's been under a bear indicator since April 12th. And the first bear indicator that popped up at the beginning of the year was on January 10th. And shortly after, if you look at the 1 week, it popped up on January 24th. And from that moment forward, that bear indicator has dominated the overall chart. And we've also zoomed out and looked at other corrections and crashes as extra layers of confirmation of what's going on and how fast these were compared to this one. These lasted several weeks to 2 months. This one has been for nearly 7 months now, and we're consolidating and fighting here, trying to stay above 372, which we talked about in previous videos, and trying to not retest the lows of 362, and that's going to be very important to watch. And when you zoom out all the way back in history, 2007 to 2009 lasted almost 2 years until it bottomed, and then from 2000 to 02-03 lasted almost 2 years and a half to almost 3 until it finally bottomed. Now what I'm really looking for is, once we have confirmation of a possible reversal and a bull indicator that pops up, because once these bull indicators pop up on 42 Vision, they tend to last for several months to years, as it has done in the last several years, and even previously in other times back in 2016, even 2018, And same thing way back here on 2013, even here on 2014. It can last for several months to years. Are they going to be violent rallies like these? No, that's not guaranteed. But at least we have something to watch and pay close attention to. And right now, we're under a bear indicator. Here we are with Secretary Yellen's statements earlier this week stating that U.S. inflation remains unacceptably high. And this is one of the biggest doves out of all the Fed members that you can think of. And stating these words, she is starting to seem a bit hawkish. Now, we had one of the Fed members this week also share and state their thoughts about how they feel about this next rate hike meeting, right? And they stated here, right, Fed Governor Waller expects 0.75 percentage point hike, but open to a larger one. And he stated that the markets were getting ahead of itself by pricing in 100 basis points into the market. And that's why things started to move quickly. If we zoom in here and look at this from the 30-minute, you could see that on Thursday he made those statements. We hit a dip area, got that bull indicator, and things started to pick up. Now, it's very interesting that the date before the consumer sentiment reading was coming out, his words were those. He started moving things back up, and then consumer sentiment reading actually made even things go higher on Friday. Could this persist? It's not guaranteed, but there are key levels to watch. We talked about that in yesterday's video. But here we are to talk about some of the main things I'm watching and why this could be a very volatile situation if the markets start pricing in what he stated, that 0.75 is what he expects, but yet we're not pricing in the 100 basis point hike if it does come, because he stated he's expecting 0.75, which is still pretty high compared to what we were expecting before, which was 0.5, no longer no 0.75s, right? But now that's actually the expectation now. But he's also open to a larger one if necessary. So that's still in the limbo. After having record high inflation after 40 years, right, at 9.1%, I don't think anyone was expecting that. That right there has created a much more aggressive Fed. It states it right here, the Fed will raise rates, right? We're expecting that. And then here you have it, the US rattled by 40-year inflation highs, and the Fed is to get aggressive with interest rate hikes. So we don't know what the surprise is, but 0.75 is pretty aggressive to begin with, and going to 100 basis point hikes is going to be a very interesting move overall, right? So let's talk about some key levels here in the charts. So one of the charts I'm watching is the 10-year Treasury chart, right? It spiked back up from July 5th to the 8th, all the way back up above 3%, and now it's come back down towards 2.93, 2.92 as this recording is being done. That is one of the main things I'm watching right now, because even though we're slightly below 3%, if it brings itself back above it and it starts pulling away from 3% back to 3.1, 3.2, or even higher, that is going to create a shakeup in the markets, and it's going to show us that the bond markets, right, and the 10-year Treasury is starting to price in possibly higher rates. Now things are trying to cool off. We'll see. But that's very important to watch very carefully. Now, on the SPY, there's some key levels here, and one of the main ones is 372. We talked about it, and it's very interesting that we slightly bounced above it, but it was slightly below it at 371, and we're back up to 385, and right now we're close to a resistance level. When you zoom in, we're going to look at that together as well. And then you have here also the price of oil, guys. A lot of people are ignoring this, and oil went all the way down to $90, but we're back close to $100, guys. We missed $100. If you zoom in here on the 30-minute, we missed it by a few dollars. I mean, literally $1, $2. It hit $98.99 right there. So super important that if this gets back above $100, we're not that far from it, and it starts pulling away from it, oil prices are going to start spiraling up. People are going to start pricing in higher inflation, and then things are going to get a lot more volatile in the markets. I've stated this before. I'm going to continue to use 42 Vision, not financial advice, just my opinion and perspective alone, to maximize within the moves and look for those dip areas and those rip areas, and then have the bull and bear indicators as extra layers of confirmation on anything I'm trading or charting, guys. It could be US oil that I'm watching. It could be Tesla that I'm watching. It could be the SPY, the QQQ, as you see it here. I mean, this is right here, a dip area right there with white with red borders. Bull indicator as extra layer of confirmation. We hit the rip area, and now we need to watch it carefully if it could continue, or eventually it's going to try to bring itself back down. Or I'll watch if it starts consolidating before it starts to bring itself back down like it did right here, and then you see the full transitions and you have the bull and bear indicators there as extra layers of confirmation as things start to pull downwards or upwards and so forth. And that's what we're continuing to do, and that's what the members are doing over at the Discord and those connected to 42 Vision to maximize within the volatility, guys. I personally believe, and I've stated this before, it's not financial advice, just my opinion and perspective alone, volatility is here to stay. I don't think it's going anywhere anytime soon, and no one knows where the bottom is, and all we have is charts to guide us and maximize within the volatility of how much volatility there is in the markets right now. So like I stated, oil and also the 10-year treasury could spark further volatility, and also Governor Waller's expectations of 0.75, but open to a larger one if necessary, and that could create even further volatility, because right now the market was pricing in 100 basis points, but then he stated it's getting ahead of itself. Now we're going back up to pricing in obviously the upward direction, 0.75 instead of 100 basis points. And if we get surprised by that, on top of oil going higher above $100 and even pushing away from it, and the 10-year treasury spiking above 3% and going up towards 3.1, 3.2, that is going to create and spark volatility. And I'm going to be watching 42 Vision to maximize if a bear indicator pops up or if a bull indicator continues to hold true, as we see right now in the 30-minute. And even on the 15-minute, it's so far holding true. No bear indicator, even on the 1 hour as well, right? So I'm going to continue to watch these transitions because we have hit a rip area. And once we hit those rip areas, eventually reversals do happen. Now, does every reversal happen as fast and as strong? No, but I'm going to be watching for it, right? Because it is hitting a resistance area. So let's talk about these levels. The first thing is 385, staying above it. If it can pull away from it, getting back above 390 is going to be key to continue to push up higher. To the downside, the first support I'm watching is 379 and 377 to keep it tight and see what goes on there if the bulls try to bring it back up, or if the bears are going to put up a fight and pull it down. If both of those get broken through, the next support is down here at 371, 372, which we've talked about before. And if those two get broken through, then it's 362, the lowest point that we've hit this year so far in this bear market. And that's going to be a pivotal area if we're going to go even lower, or if we could find support and hopefully double bottom or find the true bottom before things start to pick back up, as people are hoping for, right? No one knows the bottom, nothing's guaranteed, but the volatility is here, and that's my personal opinion. I don't think it's going anywhere, and I'm going to continue to watch these charts and maximize on the moves. And we have our bots. So far we have an Apple bot, Tesla bot, QQQ bot, SPY bot, and we have other bots on the way to continue to maximize within the volatility daily. And as you can see here on Friday, as you saw, our SPY bot sent out a bull indicator since 8:40 a.m. and things skyrocketed and held true all throughout the day until literally the last few minutes of the day. And even in the aftermarket hours, it got another bull indicator and continued to push up and put up a fight. So Monday's going to be very interesting. All of this news is interesting so far right now, but keep in mind these charts, these levels, because moving forward, we need to see if this is a real setup to continue pushing higher, or if this could be a fake out or just another volatile momentum move before it pulls right back down to retest lows. As always, thank you guys so much for watching, and let's make some money.